Chris Menino, a financial advisor here at Lux Financial. Thanks for joining me in this week's episode of LuxLearning. This week I'll be discussing systematic investing and the power of compounding interest over time. Per Zagat.com, an average dinner in New York City costs $48.56, with New Yorkers going out an average of 2.7 times a week. That's $131 a week or $500 a month. If you're able to save this money, or better yet, invest it, achieving an average rate of return of 6%, what do you think the results will look like over a 5, 10, or 20-year time horizon? Let's break it down. Assuming you're spending $500 a month eating out, over the course of 5 years you would have spent $30,000, in 10 years $60,000, and in 20 years $120,000. That's a lot of money, right? Simply not spending this money will allow you to save the $30,000, $60,000, and $120,000 in 5, 10, and 20 years respectively. That's great, but if you're able to invest and achieve that 6% rate of return, what do you think the numbers will look like then? Assuming a 6% rate of return on $500 per month over 5, 10, and 20 years, you would have roughly $33,000, $79,000, and $220,700 respectively. These figures clearly illustrate the power of compounding interest over time. The longer your time frame, the bigger your potential reward, hence the importance of starting out early. Now that you've seen the numbers, let's take a look at this chart to get more of a visual look. There are 3 different lines, all starting out with $10,000. The purple line shows a 0.01% return, the green shows a 1% return, and the blue line shows a 6% return. The difference in returns can be compared to holding cash versus a diversified portfolio of stocks and bonds. Now let's see how the performance differs over a 20-year period. After 10 years, the purple line still has a value of about $10,000. The green line is slightly greater than $11,000. And the blue line, after 10 years, has a value of almost $18,000. After 20 years, the difference becomes even more prominent. The purple line still has a value of about $10,000. The green line now has a value of just over $12,000. And the blue line after 20 years has a value greater than $32,000. Achieving a 6% return, the blue line in this graph, will double your money just before year 12 and triple your money just before year 19. This graph does a great job illustrating how rate of return and time play a major role in accumulating assets for the future. So, in conclusion, time with a rate of return is the recipe, and the earlier you start, the more wealth you accumulate sooner in life. And if you want to learn more about the resources here at Lux Financial, don't forget to subscribe. See you next time.